Investors have their hands either on a problem or a buying opportunity. Which is it? Let's get right to the floor show. Perfect two guys to decide. Market Rebellion co-founders John and Pete Najarian. Pete, I'm sorry, I'm going with age before beauty.
I would always go that way.
Okay,
yeah.
John, you're the older one. The macro picture here, it's just a single day, but yesterday, most of these numbers were in the red as well. What's going on in the psychology of the investor and trader?
Well, you have a great stock like Qualcomm. I remember when Qualcomm was more like NVIDIA is right now. And at that time, Qualcomm was the driver to the upside. ARM Holdings says, you know, no thanks. We're going to break this architectural agreement with you and not have you make our stuff anymore. That's a big deal, Liz. Also, the fact that we've seen interest rates going up, up, up. Since the September cut, we're up nearly 75 basis points. And I think that has a significant impact on investor psychology. Certainly it does on housing. Certainly it will for banks. So there's a lot of things going on. And most of those that I mentioned aren't very positive for the market right here.
You know, I mentioned at the top of the show yesterday that the one thing that tends to have the most punch in sort of punching down the markets is rising bond yields. Yes. And we do have that 10-year yield at fresh 3-month highs. So, Pete, that's obviously something. But when you look at stocks, yeah, they're individual stories. John just referenced the Qualcomm ARM situation. Yeah. That's tanking a lot of chip stocks. Intel does not look good right now. NVIDIA, Marvel, ASML. So as we look at some of these names, it is the chip battle between ARM and Qualcomm. There's been a warning that ARM is not interested in dealing with Qualcomm right now because they say Qualcomm's investing in this other thing called RISC-V. Yeah. It's RISC-V, which is an open source chip architecture company. But that tends to bring down an entire market?
Well, it's part of it. I think the real part is what John brought up already. When you look at the 10-year, you look at the kind of spike that we've made. This has been a monstrous move to the upside. And with that, they go after the NASDAQ names because those are the performers, especially when you look at the semiconductor world. The SMH, I use that oftentimes to just try to dissect what's going on with the semiconductors. And you're just seeing that relationship that they've got. As this is moving to the upside with the 10-year, every time we see that make that next move, we are seeing the semiconductors just get pushed down and down and down. Qualcomm is definitely a daily story, but look over at NVIDIA, look over at some of these other names. They're participating to the downside as well. And why is that? Because people are watching those rates move the way they are. This is an amazingly fast rip to the upside, I think, when you look at the 10-year. And this is something I think, whether it's the Fed or whomever, there's a lot of people shaking their heads right now, like, what is going on with the 10-year? And that's impacting the market in a big way right now.
It should be encouraging, though, that good headlines that are specific to a company. Remember Taiwan Semi, was it a week ago, came out with very strong numbers. And today it's, well, after the bell yesterday, Texas Instruments. They do not have AI chips. Texas Instruments is way more exposed to auto, industrial, and electronics chips. And they came in with good numbers, so they're looking pretty good. That, of course, doesn't help the SOX index, but people who have been dying to get into these names, is this a worry or is this a buying opportunity?
Right now, Liz, I'm viewing it as a buying opportunity. I am not committing capital today on that buying opportunity, though, for the reasons you mentioned. We have IBM after the close. We have Tesla after the close. We have interest rates that have not broken. In fact, that fever continues to move higher as far as the yield on those bonds, which is bonds down, rates up. So I'm going to be a little patient, but I would love to pick up, for instance, NVIDIA at 131. I can do that, of course, by selling puts. That's one way to do it. Or I can be patient and wait to buy it if I'm a stock investor. But I don't think I have to buy every little 2%, 3% dip in something that's up, you know, 200% and 300% over the past year. I think I can be patient.
Pete, when you look at your screens, and I know you've got, how many screens do you watch?
Too many. Too many. It's why I don't have glasses yet, but at some point I'm going to get them.
You're going to need them.
I'm going to need them.
What jumps out at you that isn't necessarily an obvious trade, but that looks really interesting, that you can share with our viewers?
Well, I do like, when I'm looking at the semiconductor world right now, and we were just talking about that, obviously, but I think Taiwan Semi really did come in and save the day for the semiconductors. When you really look, ASML SML, obviously, right after those terrible numbers that they reported, the market absolutely got pushed down on the semis. They were down almost 4 or 5%. And then all of a sudden, we got Taiwan Semi, and they came to the rescue of everybody. I like this name, Taiwan Semi. I think this is one of those names. It makes sense to me what they do, how they do it. They're the largest in the world for all the different right reasons. They can be the buoy, I think, right now for not the market itself, but certainly for the semiconductors, which is a huge part of the NASDAQ when we look at it. You've got NVIDIA and AMD and all these various names out there. I think it's really critical right now to keep an eye. I like Taiwan Semi even today. I like what they've been able to do. I think they're up 50% year to date, something like that.
91%.
Oh, my goodness. Well, I think it was maybe in the last few months.
Stick with me,
But I'll
kid.
stick with you.
I'll help you.
Yeah.
I'll help you any day. Anything outside of tech here? Because we're looking at the two names that are holding up, the two sectors, real estate and utilities.
Right. Well, and
You're like, no, Liz, not interested.
I would not be going into utilities with rates going up. Because obviously one of the things that people invest in when they're investing in utilities is the yield. The dividend yield from those utilities, usually quite high, versus tech stocks, for instance, that have very little. I would say if you're looking for higher rates, which for the short term, until that fever breaks, I am. So I'm not very interested in utilities right here. I'm interested in them, Liz, because of the power generation side that you and I have talked about before. AI, very thirsty for power. EVs, very thirsty for power. And you mentioned about Tesla, 465,000 cars
better than
in the
a year
quarter.
ago.
That's what we're looking for. When you compare that to Lucid, when you're talking about, under 10,000 cars at virtually every other U.S. EV maker, it's amazing that Tesla produces what they do, and that's why they get the market cap and the visibility with investors that they do, because they deliver so many cars.
Yeah.
And Robovan or Robovin, that's going to be huge, but it's out in the future.
A lot of people disagree with that, John.
Not in the short term, in the future.
Okay.
So I wouldn't even be touting that right now.
Okay, why are you not owning the bald thing? You're wearing the hat. Pete's owning it.
I'm as clean as they get up top here. I mean, it is one of those
You want
things.
the hat off? I'll take the hat off. Here we go. Here we go.
Woo! Bravo. All right.
People can't tell us apart if I have the hat off.
Wait a minute.
John and Pete Najarian, authors of It's Not an Option, which is a great book, and it is free. Okay, guys, thank you.
Thank you so much.
Very much. A new deal could save Spirit.